Hey, everybody. Good afternoon. This is Doc Severson and Dave Lukas with 12-Minute Trading. Today is Monday the 19th of September, and we're going to do a little market chat. We're just going to be here for the next few minutes. And whether or not you're joining us live or whether you're watching this through a replay, the point of today's session is just to kind of walk you through what we see happening during a very important week. We have obviously a huge week that's coming up in the market. The market is teetering on the edge of the precipice, as we've talked about, and it could really seriously go either way over the course of the next couple of weeks. So whatever happens this week and into the end of this month is going to set the tone for the end of this year, as well as probably the beginning of next year. What are you seeing out there, Dave?
Man, I'll tell you, your analysis is spot on. We've got this. It's interesting. If you look, everybody's doing the parallel of 2008 right now. So everybody's out there, they're showing the charts where it's following along. And it's uncanny how things are following 2008. And you get to this point in that following of the chart, the tracking of the two trend lines of everything for the like the S&P. And you're at this point where it was like literally this week, and actually the end of last week, September 15th, when Lehman went under, right? And nobody saw it coming. Nobody saw Lehman going out of business. And I know that because I actually had a family member that worked there that was a rising star within Lehman. And like one day he's on top of the world. The next day he's out on the street, like just shocked, right? And so everybody it was that was the straw that broke the camel's back. And then you can just see the precipitous line down, over the next few months into December before 2008, really hit that bottom. And so we're kind of in that same place, only this time we don't have a Lehman moment yet, right? So is that going to happen this week? Are we going to get, is the Fed going to be that Lehman moment where, either way, either the Fed blinks or seems to come off as blinking and getting a little bit more dovish, or does Powell go full on Volcker mode and then it just crashes this thing? That's kind of where we're at. And it's, either way, movement equals opportunity, but it's a 50-50 chance at this point, which is rare. Usually you can give a little bit one way or the other, but this time it's just up in the air.
Do you think people are living in the past right now with looking over their shoulder and saying, yep, here we go. Here comes 2008 again?
Well, that's the nature of traders, right? We're always living in the past, right? We're always, we always have the hard red edge and then everything behind it on the chart, right? And usually, and this is what I said to my students, usually when everybody sees the same thing, is thinking the same thing, is positioned for the same thing, the market's going to go the opposite way, right? The market is going to bring the most pain that it can to the most amount of traders possible. And so where's the most pain right now, right? Everybody's positioned to the downside. The put to call ratio is off the charts right now coming into this week. And so there is that just kind of, little bit in me that says that, what, Powell could come out and they can raise 75 to 100 basis points, but then just give that little bit of an inch, that little bit of hope. And then that just skyrockets the markets and everybody's got to cover their shorts.
This is just like basketball. If I say, hey, this basketball player is the next, and then fill in the blank, what would you say that blank would be?
Oh boy. Who the basketball player is?
Yeah. That basketball player is the next,
Yeah.
It's usually Michael Jordan. Everybody usually uses Michael Jordan.
Or you could say maybe LeBron now, depending on what time period you're big in basketball, right? And that's just
it's human nature. It's human nature to compare stuff that is unknown today versus something that's known and say, oh man, there's no doubt this is the next Jordan, or this is the next, whomever, Sean Kemp or something like that. But we do this with markets. I mean, I remember when I was first learning about the markets, this is not long after 9/11 happened. And I just remember a cluster of students around the presenter at the time. We were taking a break, and they, one of the biggest questions that was, hey, when the next terrorist attack happens, how do we take advantage of that? Or how do we protect ourselves against that? How do we take advantage? How can we make money in that? So this is probably 2002, about 20 years ago.
Mm-hmm.
And what's happened since then? So we looked over our shoulder the entire time, and nothing like that has ever happened.
everybody's always waiting for that next crash to happen the same way, and it never does. They still happen. I mean, that's the nature of markets. They go up, they go down, they run as far as they can in one direction, turn around and run as far as they can in the next. We've seen that really well over the last 3 weeks. It's been, straight up, straight down, straight back up, but we really haven't gone anywhere for the most part. We're kind of in the same place we were a few weeks ago. In fact, we're in the same place we were a few months ago, at this point in time. And so the market's just been, and I said this at the beginning of the year, I thought this year would be a big sideways market. And we're really seeing that just come into play. And yeah, this move's going to, that comes off the Fed will be big in a direction, either way that it goes. But, I still I don't think we're going under 3,000 on the S&P. I don't think we're going to 4,800. I think we're going to be range bound, and it may be like 3,500 up to 4,300 for the rest of the year. But I just think we're going to be in more of a range bound market for some time now.
So Dave, let's do this for the show. Why don't you share your charts and make an argument for where we're going to be a week from today, and then I'll go ahead and do the same and pretend like I didn't hear yours.
Yes, pretend that we don't come from the same type of...
Yeah, we're not going to cross the streams here.
Let's see here. So, all right. So you guys can see I've got the daily, weekly, and monthly charts up. This is daily, 1 year day. This is the weekly, 3-year week. And this is the 5-year monthly chart. And so one thing that is absolutely glaring to me as I look at these first and foremost is that all of these time frames, as you can see down here, this is my energy line. Now, Doc and I have different fractal energy lines. Mine is customized to me. It's hard-coded for things that I wanted to do that I have taken over the years. But I think the important thing for you guys, if you've never seen the fractal energy line or heard about that before, it's a derivation of the choppiness index, the standard choppiness index that's out there. It's not the same, but that's the closest thing. But what this does is it tells me if a chart is ready to trend or not. It doesn't tell me which way it's going to go, but it does tell me if a chart is ready to trend or not. And so anytime you're above 50, you're charged up and ready to go in a chart. So as it always happens, we're coming into probably one of the most pivotal weeks of this year and for the foreseeable future, almost like when 2008 the Fed met and made their decision. We're all charged up, right? Every time frame is charged up and ready to go. And so you can think of these, they go from the inside out. So a daily swing is going to go 8-10 trading days. A weekly swing can go 6-10 weeks even, and then a monthly will go for a year, right? This was, you can see a big monthly swing back here took over a year, right? That can happen. And so you're going to look at it from the inside out. So this week, the big chart that I'm going to be focused on is what this daily chart does, because we've got ourselves at the lower Bollinger Band. And that I like the Bollinger Bands. For me, they're kind of like the ropes of the boxing ring, right? So you think about a boxer gets thrown against the ropes in the ring, it throws them back in, right? And the Bollinger Bands tend to do that. So when you're at the bottom Bollinger Band, you're fully charged up, chances of going back the other way are pretty good. Now, again, we've got a very big event that can affect things either way, right? So we can use that energy to go down and do what we did here against the Bollinger Bands, but eventually we get thrown back in, right? Markets run as far as they can in one direction, run back as far as they can in the other. So that's just something that I like to watch, where we're sitting right here, and it's a good place for us to bounce from. So again, if the Fed gives any inkling of hope, this thing will skyrocket higher, do something like this over the next few days. And then you've got the weekly chart, right? And the weekly chart started to do its release right into here to go lower. It hit this confluence on it that you can see here, right here, and it's kind of hung there. And so this is the breakdown point. This is either you're going to be your support right in this range, or this is where you're going to break through. So I'm watching this right in here around this 38.50 level or so. Do we break through this? And that's it. That's lights out for me, because this energy will roll over, and here we go. And usually this energy burns out around 35 to 40 range, right? So that puts us all the way down to this lower Bollinger Band. Then that's probably where we find support, right? That's the lows from June. And then you got this guy, the monthly. And the monthly right now if this starts to release, which I think we'll start to see that over the next couple months, because this happens over the course of months, that'll really set the direction for the next year. So everything I think hinges on this decision. And that's a rare thing that you have where everything from the foreseeable future hinges on a decision just like this. And so that happens every so many years. And so that's where we're at. But all these energies can come into play. And we just need to be ready either way, right? If you've got a lot to the downside, hedge your bets a little bit going into Wednesday. Use the weekly options. Buy some puts that expire on Wednesday or even Thursday, right? If you need to hedge the upside, same type of thing. Just give yourself a little bit of wiggle room either way, and then get ready to play that movement all the way, whichever way it goes, and take advantage of it because there's going to be a lot of opportunity. So that's my take.
Okay, let's see. I'm going to take the easy way out here, and I'm just going to grab a chart and swing it over.
You're just going to grab Jim Cramer's Twitter feed and say do the opposite?
Yeah, I'm just going to. So I've just got the daily chart of the S&P 500 here, and that's all I care about right now. So what we've seen since the beginning of the year has been we've essentially hit bear market status. And so this is very, very
it's not
close.
Showing on the screen.
Oh, so. It's not showing on the screen. Let me see what I have here. No, and it won't show on the screen because I'm broadcasting it. So I'm kind of overriding what's happening here on instead of doing a share through the Zoom, I'm just overriding it. So this should show through the YouTube. So what I'm looking at here is, like Dave said, it's all going to depend on the tone that Powell has on Wednesday. But I see a lot of people looking for a downside movement. And we will have that downside movement if Powell sticks to the script and goes ahead and just does the 75 basis point hike without saying any mention at all to any kind of thing to accommodation in terms of data. So if there's no accommodation to data, we will retest the lows of June. So somewhere around 3,600. However, I think there's a very, very good chance that we end up bouncing at that point, depending on what happens from that. So I think there's a very good chance that we bounce and we don't do what 2008 did, which was just to keep on going lower. 2008 was just a wicked draft that did not stop when it got down to the lows. If Powell does talk about accommodation on Wednesday, like Dave says, we will probably rip higher above 4,100. And that will catch a lot of people off guard. So once again, this could all happen within the space of a week here. So if Powell sticks to the script, we go lower in the short term. Ultimately, by the end of the year, I think we may have a bounce in play. As bad as the news is right now, we've got everybody positioned to the downside right now, and nobody's, I find lightning never strikes in the same place in the same time. So I'm always looking for the opposite move to the herd. So we'll see if that happens or not this week.
Yeah, that's that. And that's it. And that's where, like I said, hedge yourself a little bit on either side. Don't go out too far, right? You just need to hedge for the next few days. Once you know the direction, then you can take advantage of it, whichever way it goes, because there's going to be a lot of opportunity. Movement always equals opportunity. Remember that.
Yeah. So that's all we had for today, guys. We don't want to take up too much of your time. We just wanted to get in here and throw down in terms of what we thought. And so what we'll do is a week from today, we will come back here and compare our predictions with what actually did happen. And I'm sure it's going to be a surprise one way or the other. So thanks, everybody, for hanging out with us here today. Dave, any final thoughts?
No, just, you know what? It's a good week to be risk off until after Wednesday. Enjoy it, watch the fireworks, and then get to work.
All right. Well, thanks, everybody. Thanks, guys. Yeah, thanks for hanging out with us here, and we'll see you shortly. Adios. Okay.